Welcome to Accounting in the Wild, where we'll discuss various subjects in the tax and accounting world, also featuring tales from the field and interviews on various tax and accounting subjects. All this and much, much more on Accounting in the Wild. And now, here's your host, Jason Dinesen.
Welcome to Accounting in the Wild, brought to you by My-CPE 1. To watch the full episode and earn your CPE credits, go to my-cpe.com. Make sure to include the hyphen and continue your professional learning journey. In addition to this podcast available for CPE, you can find literally 15,000 hours of content for continuing education at My-CPE. My-CPE 1 sponsors Accounting in the Wild. And let's get started. We have no guest to introduce this time around because I'm flying solo on this episode, talking about some 1099 updates. One of the things that I present on as a teacher a lot is Form 1099. I've actually been teaching on 1099 since 2012. So a very long time. And the big, beautiful bill has some proposed changes in it to 1099s. And so we've had the House that passed the big, beautiful bill, and now the Senate. The Senate hasn't passed it yet, but what happened on Monday the 16th is the Senate came out with what their tax provisions are in the big, beautiful bill. And so, this was going to be a generic big, beautiful bill episode. And then I got to thinking that everybody is doing that, either in podcast format or in written format. But I'm kind of the 1099 guy. That's what they call me at, IOFM is one of the places I do a lot of things with. If you're in the accounts payable and accounts receivable world, check out iofm.com. Look at a membership. They have a conference in Orlando and a conference in Las Vegas every year. I go to their conferences and teach 1099 sessions. And where I was going with that is, I'm the 1099 guy at IOFM. Like I say, I've been teaching on it a lot. I haven't seen anyone else talking too much about these 1099 provisions. So let's talk about them. There's three things that I picked out of the big, beautiful bill, both the House version and the Senate version. And as it happens, when it comes to these 1099 provisions, the House and the Senate say the same thing. So, those three things are a change to the $600 threshold, a change to the 1099K threshold, and a new reporting form. A name was not given in the bill. Presumably, it'll be up to the IRS to choose the name, and it'll probably be a 1098 rather than a 1099, but a form for lenders who receive interest on auto loans to report that interest to individuals, because the big, beautiful bill calls for taxpayers to be able to deduct auto interest as an itemized deduction. So those are the three things. And I guess when I say it's a 1099 update, that last one on the auto loans really would probably be a 1098. But let's just say a reporting form update. Let's start with the $600 threshold. So the big, beautiful bill, as passed in the House and also in the language of what the Senate has released of the tax portion of the Senate draft, calls for the $600 reporting threshold to change to $2,000, starting not this year, but next year, 2026. And then it would be indexed for inflation going forward. So that's a significant change. People have been asking for that for a long time. By the way, this is not in law yet. This is what's in the bill. But the way this works is the House has passed the bill, the Senate has to pass it. There's going to be differences between the two bills because this bill has a lot of things in it, not just 1099 provisions. And so the Senate will have their version of things. And then there has to be reconciliation between the House and Senate to get something that they all agree on. And then the president would have to sign it into law. So these are things to watch and be aware of, but understand, don't change your systems yet because this hasn't actually happened. But people have asked, for as long as I've been teaching on 1099s, they've asked, why doesn't the IRS change the $600 threshold? It's so low. And the answer to that is that the IRS can't change it. The $600 threshold in Section 6041A is set at $600 by law, and it's not indexed to inflation. So it takes an act of Congress, such as the Big Beautiful Bill, to make that change. A trivia factoid. How long has the $600 threshold been in place? Sometimes when I'm teaching my 1099 classes, especially last year, I'll give you a hint. Last year was a milestone birthday. I'll ask sometimes, how old do you think the $600 threshold is? And some people will say like 20 years, 30 years. A few people guess 50. I had one person a while back guess 60. 60 is close. The answer is 71 years old this year. The current threshold was set in 1954 at $600. And it's not been indexed for inflation. If it had been indexed for inflation, it would be approximately $7,000 today. Another trivia factoid, I like to throw these out about 1099s, give you little things to keep in your mind about 1099s. Can bring them out at the summertime cookout or whatever, and really impress everybody with your vast knowledge of these things. When did 1099 reporting start being required? The answer to that is 1939 is when 1099 reporting started to be required. And did you know in 1939, the reporting threshold was $1,000. That's $1,000 in 1939 dollars, which would be somewhere close to 23,000 in today's dollars. So it started in 1939 at 1,000. Then in 1954, they dropped it to 600, and it's been there ever since. So the Big Beautiful Bill proposes to up that to $2,000 and then index it for inflation going forward. One thing, well, I mean, there's several things, but one thing is, I said don't change your systems until this becomes official, but also don't change your systems for this year because the text of the bill indicates that it would be 2026 is when the threshold would change. So 2025 would still be the $600 threshold. Then we have Form 1099-K. So 1099-K, for most people listening to this, you probably won't ever issue 1099-K, but you'll probably receive it. It's a form that's issued basically by two parties. One is merchant processors on credit card transactions. What does that mean? Your business accepts credit cards. You probably have a merchant processor in the background that handles those transactions. That's a merchant processor. They will send you a 1099-K if the dollar amount of credit card receipts, credit cards and debit cards, was $600 or more. That's how that's always been. The other piece of it is apps, payment apps like PayPal and Venmo. Those are probably the two big ones, but they're not the only ones. Third-party network transactions is the technical name of that. They have had to issue a 1099-K when the recipient of money from that platform, that app, had both more than 200 transactions and more than $20,000 processed. This was set in the Affordable Care Act. That's another trivia note for you. The ACA created 1099-K reporting and set that threshold. 2012 was the first year of reporting. 200 transactions, $20,000 processed. In 2021, in the third COVID stimulus bill, the American Rescue Plan, in March of 2021, Congress passed a law that changed the 1099-K threshold for third-party network transactions to $600. And that was supposed to be effective for 2022. There's been a lot of uproar over this. And so the IRS has kicked the can back several times on implementing this. For 2025, the threshold is $2,500, and $600 is supposed to be the threshold for 2026. What the big beautiful bill does is it wipes all of that out and resets things back to 200 transactions and $20,000 processed. Again, for issuing 1099s probably won't affect too many people listening to this, but certainly for receiving this form, if you receive money through PayPal or Venmo, that's going to be a significant change to go from a $2,500 threshold supposed to drop to $600 and instead changing back to 200 transactions and $20,000 processed. By the way, you have to meet both of those thresholds before you would get a 1099-K. That's one of the reasons Congress wanted to change the 1099-K threshold for third-party network transactions. By the way, it's only for business transactions. So some people have freaked out about this drop to $600 that the American Rescue Plan called for. But it's not, some of the articles have implied that the IRS is coming for every Venmo transaction. You pay your fantasy football dues on Venmo, and the IRS is going to know because you're going to get a 1099-K, or your league commissioner is going to get a 1099-K. That's actually not true. It's only business transactions. A 1099-K would be generated only if payment was made through a business account, or when making the payment, you mark goods and services as the payment type. Otherwise, on personal transactions, there wouldn't be a 1099-K. But where Congress was going back in 2021, when they changed the threshold down to $600 on 1099-K for Venmo and PayPal and such, it's because think about the original threshold, 200 transactions, $20,000 processed. And say you have a contractor. I like to use this example when I'm teaching about this. There's a contractor with 10 business clients, and each of those business clients pays him $25,000. So he's receiving $250,000 in total. If payment comes the old school way with a check or a bill pay transaction like Bill.com or Zelle, the paying business would have to issue a 1099 NEC. And the IRS is going to know all about this contractor's $250,000 of income, because all of it is going to get reported on a 1099. But if all of these payers pay through PayPal or Venmo or some other payment app, and they mark goods and services when making the payment, the regulations say that if a payment could be subject to 1099-K reporting, you don't have to issue a 1099 NEC. That's in the regulations under Section 6041. So the paying business would not have to issue a 1099. By paying through a third-party network like PayPal or Venmo and marking goods and services, they've now transferred the reporting obligation to PayPal or Venmo. And under the old thresholds of 200 transactions and $20,000 processed, think about our contractor, 10 clients who paid him $25,000 each. So he received $250,000. That's way past the $20,000 threshold. But there's a second threshold for 1099-K, and that's 200 transactions. He only had 10 transactions. So PayPal or Venmo won't issue him a 1099-K, and the paying business won't issue him a 1099 NEC, and it's all legitimate under the law. But that's $250,000 of income that's not being reported on a reporting form, and then you're relying on the good graces of the contractor to honestly report their $250,000 of income. That's the problem that Congress was trying to fix in reducing the 1099-K threshold down to $600. And in my personal and I guess professional opinion too, I don't know that this change back to 200 transactions and $20,000 is so much because of public outroar over, oh no, I'm going to get a 1099-K. I think it's probably more, in my opinion, the companies that have to issue 1099-Ks. There's a big difference between setting your system up to issue a 1099-K when you have a payee processing more than 200 transactions and more than $20,000 versus someone receiving $600. There's a lot of extra forms that you would have to issue. So that's why Congress in 2021 wanted to reduce the threshold, but now they're proposing in the big beautiful bill to put it back to the way it was. And then the other change on reporting forms is that the bill would require the creation of a new reporting form for lenders who receive $600 or more of interest on an auto loan. And we don't know what that form would be called. That'll be up to the IRS. I assume it would be a Form 1098 of some sort. Not a 1099, a 1098, because it would be a lender reporting interest received. And the reason for that is because the big beautiful bill calls for individuals in some cases to be able to deduct auto interest paid, auto loan interest paid. That's one of the proposals in the big beautiful bill. And so to help facilitate that deduction, there would be this new reporting form that would have to be issued to report the interest that a lender receives on an auto loan from somebody. And then there's one other update that I wanted to talk about that's not in the big beautiful bill, but this is a big deal. For those of you who use the FIRE system, FIRE, filing information returns electronically. That's the IRS's older system, their legacy platform. I don't even know how long it's been in existence, but it's a long, long time. And a lot of people use the FIRE system. A few years ago, the IRS created a new e-file platform called IRIS, Information Return Intake System. And we knew that the FIRE system would be phased out eventually, but we didn't know when. And now we have the first indication of when from the IRS. It's in writing, actually. It's proposed. It's their goal, basically. So it's not official, but their goal is to turn off the FIRE system in December of 2026. So not this December, but next December. That's their goal. And what that means is, a lot of businesses still use FIRE. Because FIRE, especially if you're filing a lot of 1099s, the FIRE system can accommodate bulk filing. It also can e-file Form 1042-S. Those are two limitations that IRIS currently has. IRIS has a 100 form limit. Now, if you have 1,000 forms to file, you can file in batches. So you could upload 100 and then upload another 100 and then another 100 and so forth. But it's a longer process for uploading than in the FIRE system. And also, as of now, mid-June of 2025, the IRIS system still does not accommodate electronic filing of Form 1042-S. Now, presumably, the IRS will enhance IRIS's capabilities over the next 18 months. But as of now, that's one of the reasons why people still use FIRE. If you're doing a lot of 1099s, it's more convenient to upload them through FIRE than it is to upload them through IRIS. And if you have 1042-S, you can't use IRIS. You have to use the FIRE system. But if this timeline holds, December of 2026 is when FIRE gets turned off. That means this year's 1099s would be the last ones that you could file in FIRE. Your 2026 forms, you'd have to use IRIS. Well, let's talk about what are your options. If you're currently using FIRE, what are your options? Well, your options are either get a login to IRIS and figure out how to use it, or partner with a vendor. There's different online platforms and such providers who can do the e-filing for you. Here's the thing, those platforms and vendors, they ultimately are connected to either FIRE or IRIS or probably both. So yeah, this change with FIRE going dark, it's going to affect them too, and they'll have to switch everything over to just IRIS. But the bottom line is these platforms can do things for you so that you don't have to deal with creating the uploads and everything. You can upload into the platform, and then they take care of all of the formatting and the filing and all of that stuff. And a lot of these platforms can do more than just e-filing of forms. A lot of them will do like Form W9, not ITIN, Form W9 TIN verification too, for a price, of course. But I use one of those platforms myself for the times when I've needed to file 1099s. I don't have a login to FIRE or IRIS. I use a platform. So that's that's your options. Either get yourself a login to Iris and you'll have to figure out how to use it, or partner with a platform that can do the filing for you. Whatever you decide to do, it's good if you start thinking about this now, because this year, 2025, will be the last forms that you can file in the fire system if the IRS's proposed timeline holds. That could change. Yeah, that's the theme of all of this, I guess. The stuff in the big beautiful bill, that could change or not happen. It could get cut in the final version that eventually gets passed and signed into law. This December of 2026 retirement of the fire system could get pushed back as that date gets closer. But the bottom line is the end is coming for the fire system. Even if the IRS, maybe they kick the can back another year at some point, but the bottom line is the end is coming for fire. So if you use it, start making alternate plans. Well, that'll do it for this episode of Accounting in the Wild, brought to you as always by My-CPE 1. I'm Jason Dinesen. Thanks so much for joining us, and we will talk to you again next time.
Thanks for listening, and join us next time for another edition of Accounting in the Wild with Jason Dinesen.